to Real Estate Ride Along episode 8. Dun dun dun. 8 is an infinite number.
I was just gonna see that. Yeah, it looks like infinity.
It is. It's infinity switched on its side, which is one of my favorite numbers. And actually, it's yours?
No, it means money.
Oh, it means money?
Lots of people like money.
Because I'm born 8/26/80, and 2 + 6 is 8.
Oh.
Danny's born 2/24. If you add them all together,
numerology now?
78.
Okay.
And Elliot's born 11/14/08.
Damn.
I know. I'm telling you, 8 is great.
8, yeah. Continue.
So welcome to episode 8 of Real Estate Ride Along. I'm Shemeika Fox, your Santa Cruz Real Estate expert, and this is my dear friend Mitchell Stelling with Rivest Loan.
Wow. That was nice, clear, and concise.
And we have some exciting news today.
Me too. I don't know if it's that exciting, but we have news. We have news.
No, I think it's exciting.
No, yeah. You think it's exciting?
It is what it is. Like, what are you going to do? Like, inflation is up.
You know what?
Dun, dun,
I
dun.
take that back. It's exciting because we're going to talk about ways to combat it.
Exactly.
And overcome it.
That's what I'm talking about.
I take that back. You know what?
Yeah.
You're right on.
Like, we don't get to, we don't have enough control over the world and the universe and the economy to make it do what we want when we want it to. So instead, we educate ourselves.
Yep.
We provide information so that you as a consumer can decide how you want to apply the information and protect yourself and protect your assets in a situation where we don't believe anymore that interest rates are going to be dropped 6 times in 2024. I'm not even actually sure if they will be reduced 2 times or potentially even 1.
Yeah.
It's
becoming so, wow. I drop everyone. Shemeika Fox, did you hear that? No, I agree with you. I think it just seems like it's getting pushed down farther and farther in a sense. And I don't know, we're going to talk about some reports today, but it just doesn't seem like
our inflation is not at 2%.
It's inflating, I'll tell you that. Yeah,
our inflation keeps on going up, which it's strange, right? Because like if we were to go into a recession, then interest rates would come down.
Yeah. It's like we're almost there, but we're not, right?
And actually inflation and a positive employment data market report is a good thing.
Mm-hmm.
But it keeps our mortgage interest rates elevated higher than we and the consumer would like to see.
Exactly.
Yeah.
Exactly. Should we explain what a CPI consumer inflation report? Oh, well, thank you very much. I have the mic, everyone. It is a report that monitors and tracks the cost of goods.
Yeah.
And it also tracks
consumer pricing index.
Yeah, you got it.
Sorry.
I was like, what's it stand for, Shemeika?
Consumer pricing index.
Very well.
Okay, go ahead.
Sorry, and no, not at all. You never interrupt. But it's just a way that we keep track of the cost of goods, services, energy costs, all of that stuff. And like Shemeika mentioned, we have an uptick. We could probably even put a graph on here. It's going to be something I'm going to do.
Oh, are you?
Yeah. Because I have one that I'm sending out to all my pupils.
Cool.
Yeah, I sent it out to like 4 clients this morning. So it just kind of shows like we did see slight improvement earlier this year. We did see some improvement in rates. However, last week was not a great week, unfortunately, because yes, that report came in higher and rates have been climbing since then.
Yeah.
So
the CPI report rose from February, which was 3.2%, to March at 3.5%. And year over year, sending 10-year U.S. Treasury yield above 4.5%.
Exactly. And one fun thing I want to mention about the 10-year Treasury yield, it's a great way
if I read notes on this thing?
I think that's fine.
Okay. I just
comment down below if you would prefer Shemeika not to read.
I would rather give you accurate information.
No,
I don't always remember the exact numbers.
This is like the numbers. It's kind of like the finance part.
Yeah. Okay.
She's extremely skilled at many things. Even this. But no, just like a little cheat code I like to tell my clients when we are actively shopping is I have them, it sounds really boring, but I have them pull up the CNBC 10-year Treasury yield and they can track it daily. And if it goes up, interest rates follow. If it goes down, interest rates follow. So it kind of predicts the future slightly in interest rates.
Yeah, I
Because
love it.
that's what they follow. Mitchell's cheat sheet or fun tip of the night.
I love it. And then let's talk about our very strong March jobs report that came in on Friday.
Tell us
The economy added 303,000 new jobs in March, which is way ahead of expectations. Again, this is positive in our economy. We want jobs. We want people to be working. We want people to be earning. But the positive part of what we are calibrating in our economy also has a negative side effect, which is that interest rates will remain high while inflation and jobs are good.
Yeah.
I guess it means
Well,
people can afford more.
Damn it. That's so funny. Not really.
No, they don't necessarily want to afford more, but
Yeah.
they can.
No.
So the unemployment rate went down from 3.9% to 3.8%, according to the Bureau of Labor Statistics.
My question for those, and I don't think we're going to have an answer on this because this is the Bureau of Statistics.
The Bureau of Labor Statistics.
Thank you. Yes, is what type of jobs are those? It sounds like they're all pulled in. Are those a $15 an hour job? Is that a $70 an hour job? That's always like my question that I have.
The report that I read last week
Mhm.
said that there was a high influx on construction and
Okay.
service industry jobs.
Interesting.
Yeah.
Okay, cool.
Mhm.
Gives
So I
us a
don't
little bit of insight of
necessarily know what the market rate is for hourly or
with
salary,
those professions.
but those are the industries that have been adding jobs and hiring,
So
which makes
that's-
sense considering AI
Mm-hmm.
taking over the tech world, right?
I know, it's crazy.
Right, so
ChatGPT,
the
ever
thing-
heard of it? Crazy.
Things like construction or things that you need to do with your actual physical body and
Yeah.
hands.
Mhm.
Those are the industries that still need human beings to work.
Yep, exactly. There's many, just like real estate agents and lenders.
Yes.
The people need to be there still.
Yeah.
But I think
Well,
I would
that's
have,
actually an interesting statistic too.
yeah. Lay it out.
So, this whole National Association of Realtors settlement situation, which we keep on kind of like intertwining,
I
and I'm
think last
trying not to
week's
talk
video-
about it
I mean, it's
anymore
big
because
news
it's
stuff.
like,
I think people are
okay,
interested.
the
There's a lot
horse
of
is
stuff.
dead.
Yeah.
Right? Is that
Not
what
yet.
we're saying?
It dies in July.
But people have choices. They can also sell their home without a realtor. That's never been a law. You don't need to hire somebody to buy or sell your
Yeah.
home. And still, before this National Association of Realtors settlement lawsuit was finalized in 2023, last year, 90% of people who transacted used a realtor for their transaction, even though they had the option not to. And every day you choose to use a realtor or not, you have the option not to.
Mhm. Well said. It's true. They've always had that option.
They have always had the option. So
Exactly.
90% of people who transacted, that is a very high percentage.
that is.
So those who are thinking that this settlement is going to be the end all be all of our industry, I would be very, very surprised to see that happen. I don't think that what we do
Mhm.
is replaceable with AI or
I don't
computers
think
or
so
anything.
either. I think it can streamline our business.
I think it can too, and I think it will make it a lot more efficient.
But this is too big of a decision to
Yeah.
just listen to a computer.
Yeah.
I think.
I
You need
mean,
someone
even
with experience.
ChatGPT doesn't get it right when I'm like, make what I wrote
Totally.
more magical.
No, exactly.
It's
I mean,
like-
think about the relationships. Like, for example, Shemeika's been in business for some time, and she's
20
very
years in
well
February.
connected. She's 13. She's extremely well connected in our community, and these relationships also play an important role of you winning your clients the home.
Yeah,
The listing agent on the other side, let's say you're on the buyer's
yes,
side,
absolutely.
knows you, trusts you, has
Yes.
seen you perform in the past,
Yeah.
and that's huge.
They'll know that.
AI
get the
can't
job
do
done.
that.
AI cannot do that. In fact, I have had listing agents say, if your client can come up to this, I'd rather work with you.
Mhm.
What
You've told me
can
this
you make
before.
happen? And
Because
my
they know what
clients
they're getting.
ultimately get the deal.
They know what they're
Right. I
getting.
mean, they have to compete, but they get the
Of
deal
course.
in a multiple offer situation
Exactly.
because they know what they're getting versus like some random person off
Exactly.
the street or whatever.
Who you work with matters.
Or if you're representing yourself, I know on a listing side,
Yeah.
if I was a listing
Oh my
agent,
God,
and you were
right.
representing yourself, I would be very nervous
Me too.
to have somebody representing themselves. In
So-
fact, I'm in a situation right now and the buyer keeps calling me and I
Yeah.
keep reiterating, you have to have your agent call me. I need to talk to your agent.
sure.
I can't talk to you about this. This is
Exactly.
why you have representation.
Experience.
Anyways, I think we've digressed a little bit. I want to
I
talk
know,
about
sorry.
how we can mitigate the fact that I don't believe that interest rates are going to actually come down this year much, if any. So what are some options in
Yeah.
order to bring interest rates
To-
down, and what are you offering?
Totally.
My
So,
heritages, I'm sorry.
yum. So one option, this became popular when rates did climb back in 2022.
Yes,
back in
I
those
remember.
Good old days. So 2022 into 23, they're still around. Is a 2-1 buy down.
Mhm.
So it's a buy down that I think we've actually filmed a video about this.
We have, but let's just
Let's
dive
review
in.
it. So it is where the seller does have to pay for this. They offer a credit. So we call it a seller concession in our industry. And they essentially buy down your rate by 2% the first year,
Mhm.
1% the second year, and then it goes back to it's what we call like the note rate the third year. So if your rate was 7%, the first year it's 5, second year it's 6, and the third year it goes
7.
back to 7.
Yeah.
That's a great way if the client qualifies, because you have to be qualified on the third
The
year
7,
rate. You
yes.
can't just be qualified on the first year because things would not go so well. On
No,
year
then we would
2
end
and
up in
3.
2008,
Yeah, we don't
2009.
want to do that again.
If
No
well,
adjustment.
that would be a housing bubble.
Yeah, that would not be good for our industry. So that's one tool. Now, one other thing I've been doing with a few of my first-time buyers right now is as these rates keep climbing, they are getting close to being priced out of the market.
Yeah.
So the ones that have some assets set aside in addition, obviously, to their down payment and just reserves after closing, we make a decision together is how bad do we want this house and how much does it cost to buy our rate down so we can qualify? Because we need to keep our debt to income ratios, generally with conventional financing, under 50%.
Mhm.
I like to keep it somewhat under that. I don't want all of, half of their funds going towards housing, but we're in Santa Cruz, California. And
Hmm.
most people have a debt to income ratio that's 40% plus. It's just kind of a reality
It's
here.
expensive here.
It is.
It's
beautiful.
worth it,
It
but
is,
it's
yeah.
expensive.
Totally. So that's something I've been doing lately where I'm helping my clients. We call it a permanent buy down. I generally don't recommend them because when rates do come down, let's hope in 2025, none of that money that you pay on the front end can be credited or used for the refinance.
Mhm.
So that's one other thing. I'm talking a lot this
I
video
love it. It's all about
that I'm also helping out my clients with. This is something, it's, I guess, loan officer dependent. You can
Yeah.
ask your loan officer if they would do the same, but most of the loans that I'm originating right now and helping my clients, win homes and get in, we're going to be doing a second loan probably 6 to 12 months from now.
Mhm.
And there's
once rates do drop.
rates, exactly.
Mhm.
And there's closing costs involved with both of these. So we are, me personally here at Revest Homes, for all of my clients that I'm helping, I'm going to be giving them a break on the second loan. So they're not going to be, thank you. Yeah, that's better. It's not completely free.
A discount.
But
on
a
the-
discount
so-
just on
so-
closing costs. So
so-
it gives them, a little bit of a
Wiggle room,
cushion.
peace of mind. So
100%.
if you buy a house today and rates are at, what are rates today? Just say it.
But it's on, all right, sorry, 7.490.
Okay, and then all of a sudden,
Yes,
inflation comes down to 2% tomorrow, and then we see 5% in the next within the next 6 to 12 months.
Mhm.
Then my dear friend Mitch right here will refinance your loan into that new lower interest rate
Exactly, at a lower cost.
and with a discounted fees.
Exactly. So less closing costs involved with that. That's something.
For all of the details, you have to talk to him because
Yeah.
it is really complex and we can't go into like everybody's going to get the same exact deal. But call him and have a look.
Everyone's situation is different, but it's definitely going to be helpful. when it
That's
comes to-
really generous of you.
Thank you, Shemeika.
And so how
Well,
come
it's
you
just-
can do that?
Well, because we're originating a loan on the front end for the client, and on the back end, we have great investor relationships where we're able to ask for credits from these lenders.
Mhm.
And then also myself being able to kick in, if I make a little, and be totally transparent, we obviously make a percentage off the loan.
I mean, it's your
But
job. You should
exactly.
be paid for what you're doing.
Well, thank you very much. This isn't free, unfortunately, but since we originated a loan for them in the front end and we're
Yeah.
doing this refinance a year later,
Yeah.
it
Within a year.
exactly.
Yeah.
It's just I'm fine to take a smaller amount in my commission to be able to help them because I do want to be their advisor for the long term.
That is so generous of you.
Well, thank you, Shemeika. Well, hey, I like people. Most
Yeah.
people are nice.
Yeah,
My
something.
clients are nice.
Anything else
Right.
we need to cover?
I think those are like the main things. So I think the recap of it is make sure you're working with a true professional.
Absolutely. Mitchell Stelling.
Yeah, just make sure that when you are getting a mortgage or financing, I would ask your loan officer if there's any type of special or, something that they can offer when you do a refinance.
Right, within a certain
with
period of
them.
time.
Exactly.
Yeah.
I'm sure they're not going to have it up for 20 years.
And then the third thing to recap is I'm not sure that we're going to see rates drop this year.
Yeah, realistically speaking, I mean, the Fed says that they're going to do a cut, but the cuts, it started with 6 and now it's like down to 2.
Yeah. And
It's
our
only April
inflation
and
is up.
inflation numbers. So it'll be interesting to see next month, and we'll just kind of keep track of it and kind of throw it in at one of our videos. We'll keep you guys updated. But I think we just need to be conservative on when I keep telling clients now 2025.
Yeah.
We could get lucky by the end of this year, great, but I just, the rate that we're going, it seems like early 25.
Oh, I do have one more solution to combat inflation, because remember, real estate makes up 1/5 of our economy. So if you are sitting on the fence as a seller, it is a good time to put your house on the market. There is limited inventory,
Seriously.
there is pent-up demand, and that is actually attributing to our high inflation rate.
Yeah, exactly. It
So-
is like I've had such an influx in buyers lately that it's wild.
Yeah, and
What's
they
happened in the
can't
last
find
6
anything, or they
weeks, and they can't
compete
find
with
anything.
offers.
And there's like real great quality buyers out there
Yeah.
that can close quickly, and you can get top dollar for your home right now.
So if you as an individual
So-
want to fix the inflation problem,
Yeah.
call us and we
Buy
will
it
list your
first.
home today.
Yeah, exactly. I can finance it.
I think that's it.
All right, I think
Real
that's
estate
it.
right along episode 8.
We'll see you guys next week.
Cool.